Hey traders, this is Blake Morrow with Trader Summit. I have Mr. Dick Matthews from Pardus FX joining us today, day before the historic FOMC rate decision that the Fed's going to raise rates in the face of darkness. So, no, I'm just kidding. But good to see you, Dick.
I do.
So here we are. We're a day ahead of the Fed, and
Yeah.
and the Fed is it seems like they're expected to raise rates at least by a 0.25%. What are your thoughts
Yeah.
going into tomorrow?
Well, between the devil and the deep blue sea, if they don't raise rates, everyone's going to go, "Oh my God, there's something nasty in the woodshed. There's another bank going to go under." They're really, really scared about this. If they do raise rates, they are going to make the situation worse. But they must be. I think they've got to do it. They've got to raise rates. I think they'll raise by 25. I wouldn't completely rule out them raising by 50. And I think that Powell will come out quite hawkishly and may well surprise the markets again. You still got inflation.
I was going to say the inflation mandate still should stick. Sticky, get it? Sticky inflation, pun intended.
Yeah.
Anyway, that inflation mandate should still stick, and we still, last I looked, inflation is still above 2%. So, so the Fed's got to march forward. But why are stocks so well bid right now?
Because they're convinced the Fed's going to pivot, and they've been trying to convince themselves the Fed's going to pivot. The Fed's going to pivot for what? 6 months now? 9 months maybe? Every opportunity, the Fed's going to pivot. They're going to print money. If they print money, we are going to have such, excuse my language, a shitstorm of inflation, because it's just going to pour fuel on the fire. I just don't believe they're going to do it. And I'll say it again, I think the stocks are wrong, but yeah, there's a wall of money apparently going into them.
Well, yeah, I mean, stocks are at highs, and they obviously are playing chicken with the Fed. Yeah. And they think the Fed's going to blink, but you believe that the Fed will go ahead and raise rates by 0.25%, correct?
Yeah, dude, my money's on the table. They will raise by 0.25%, if not 0.5%. What they do with the dot plot could be interesting, but I still think they want to keep rates higher for longer. And the market's a little bit calmer than it was, say, on yesterday morning, and certainly on Friday. So yeah, maybe things are turning back to normal. I don't think they are, but we'll see.
It's interesting. I did a Twitter poll, and out of last I looked, there was 3,800 votes, and the 70% of traders believed, or the people that voted, believe that the Fed's going to keep raise rates by 0.25%. I want to say 8% thought that the Fed would raise by 50, and about 20% thought that the Fed would just keep rates unchanged. So there's still, the market still does have a belief, at least a hope, that the Fed would not do anything. And maybe that's what stocks are responding to right now. Like the Fed is going to blink or pivot. But let me ask you that. Let me ask you this. When you see this type of information, what do you think is going to elicit the biggest response? And where would you want to be if the Fed raised rates by 0.5%, or if they just left rates unchanged? What would be the bigger response by the market?
Funnily enough, I think if they raise by 50 basis points, people are going to say, that's it, they're done and finished. They must pivot now, and we're off to the races. I think if they did nothing, people would get worried and say there's another problem out there. Hey, what's it going to be? And they'd start getting a bit nervous about it. And I think that's the reason that they have to raise rates to calm market nerves.
Yeah, because if they didn't do anything, the market initial response, I would think, as a trader, the initial response would be a strong bid and risk, and then you have to fade it, right?
Yeah, absolutely. Yeah. I do think it's quite funny though, because I was reading something today and saying that this is all very 21st century, that Uber's a business, has no cars. Spotify's a business, got no music. Airbnb's a business, got no properties, and banks are businesses with no money. So that it's all perfect these days.
It does work. The business model should work then. Yeah, oh, that's absolutely funny. All right, well let's talk about before I ask you what your best positions are, what you're thinking at this point. Let's talk about the Bank of England, because the Bank of England is going to be following us up just a day later. What's the Bank of England going to do? Are they gonna hit the pause button?
They're the harder one to call, actually. I think we've got inflation data out here tomorrow. I think it's tomorrow in the UK. Inflation's still really high, and I'm sure the members of the MPC, the same as I have. I've had like a week of rises coming through. I've had my telephone's gone up in price, my train ticket's gone up in price, my car parking's gone up in price. Just my television's gone up in price, my television license, my Netflix, everything's going up in price. So that must be in their minds that inflation's still endemic in the system. However, I think that any excuse they'll pause, and this may well be the excuse to pause, which is wrong. Well, I think it's wrong. I think they should raise rates by 0.5%. They won't do that. They might do a quarter, and the smart money says a quarter, because and it's not just being a proud Englishman. If you look at the world banking as a whole, the UK banks are probably amongst the strongest now. Certainly stronger than our good friends across the water in Europe. I think we've had our problems caused by the rise in interest rates with the pension problems back in September, October with LDIs. And I think when you raise rates, something's going to break. And I think we've had that issue over here. And so they should be more aggressive than they're going to be. I think they might. Hopefully they'll do a quarter. They should do a half. But I wouldn't bet against them wimping it.
So where would you want to be positioned best going into the next couple of days? Do you want to be long of dollars? Do you want to be long of gold? Do you want to be, short S&P? What are your thoughts here? Yeah. Besides from short sterling, I know that's your default trade.
Actually, I think sterling's going to pop back up to 124.45.
Okay.
And I don't know what it's trading at the moment. It's like
it's at 122. So that's a 200 pip rally.
So I think you might see that pop up, which would tie in with the dollar weakening a little bit. And I would, if it gets anywhere near that would be the third attempt at 124.45.
Yeah, it would be a multiple attempt up there. Let me see if I can just pull up some charts really quick for you. And we can take just a very quick look at the sterling. And this is what you'd be seeing. So yeah, it would be a third attempt up around 124. Yeah.
So I'd be looking, if it gets up towards there, I'd be looking to short it again because it just keeps fading. Overall, I quite like sterling for the next 200 points. I think the dollar might be getting a little bit toppy. I don't like the euro. If I had to buy a currency, it'd be the yen on a flight to safety basis, which is unusual for me to like that. Where are we?
This is the yen futures. So you'd want to be long of yen.
Yeah.
Whoops, did not mean to do that. Okay. And so I mean that would obviously put the dollar yen lower.
Yeah. On the basis that if you get another problem, and I still think we're going to get another problem, you can't buy Swissy because of UBS, Credit Suisse, and you start raising questions about Switzerland. The problem's either going to be in the euro or the dollar, and I wouldn't like to call which one. Personally, I'd say it's going to be in the Eurozone. I think the southern Eurozone looks a little bit shaky, but that's always does to me. And on a process of elimination, that leaves you with the yen to buy all gold. I've never been a gold bug, but I get uncomfortable with what's going on in Moscow with Xi and Putin. Very uncomfortable with what's going on over there. And so I think you could well see a flight to safety, and I'd be a buyer of gold and a buyer of yen. I just wouldn't get involved in equities.
Okay. So in other words, you're going to just steer clear of equities in the next couple of days.
Yeah. I fundamentally don't agree with what they're doing. And I think, I might day trade it, but I wouldn't want to get a position on board.
All right. Well, Dick, it is a crazy world we live in. So tell us
Ciao.
about what you do over there at Pardus FX for your currency clients.
Well, I try and explain the crazy world to them, and certainly had a few questions in the last few days or so about what's going on. But I just help advise people when to buy and sell, or when to do a transaction in the foreign exchange markets. There's a lot of noise out there, and it's just like, hey, now's the time, just go in there, or now just be a little bit wary about what's going on. But it's a tough market at the moment, really tough, because FX isn't really trending that much, is it? It's just like stuck in ranges, so it's pretty tough at the moment.
Well, I'll tell you, we appreciate your guidance here at the Traders Summit. So if you guys and gals like what you hear from Mr. Dick Matthews, make sure you give him a thumbs up, subscribe to the channel down below so you don't miss any of this content. Richard, thank you, and good luck the next couple of days through the central bank mania madness that we're dealing with.
Madness, yeah. Fantastic. Good one. Cheers now.
Cheers. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.